I'm going to continue the challenge this morning. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the bobblehead, coffee obsessed, scruffy trader. And doing a series of discipline challenge. And this is like a little salute to Big Balls Paul. We were talking last night. This sort of challenge is exactly what we were talking about last night. It's to control your emotions and slow you down so you're just not gun-ho in the market. It's always exciting to be in the market, press the button and see the movements of the candles, but it's also an emotional roller coaster, and that's why you need to calm down, because when you're riding high, it's fantastic, you're making lots of money. What happens when the gravy train runs out and you're not making money? It's where your discipline needs to kick in. That's what this challenge is all about. So what I'm going to do is I'm going to flick it over. I will be looking at the FTSE today. Why? Because it's cheap. Essentially, because the thing with when you are building small accounts, this one start with £300. You've always got margin against you. Now at the moment, if I just flick this over, I'll just pull this across so you can see it. I'm going to be looking to sell the FTSE today because I've worked out the buys, and we are up to 144, or at least we may well be. Let's have a quick look and see what the margin requirements are. 144 is I don't think we can do it. Just shy. We need 518 to open up a 144 position, so we have to stay at 131. Okay, so today's position will be 131. Okay, now I'm looking for a reasonable swinger today. So the way it's going to work is I need 10 pips, or I should say I'm looking for 10 pips. So if I just draw a little 10 pip box, let's use the base of that for now. There we are, that's close enough. So if I entered under there, I've got enough room between the two areas to get 10 pips. That's the idea of that. Now it's a little bit early for it just yet, but it's not a million miles away. So what I'll do is I'll just hold the camera just a second, a quick look, see what's going on. It's not bad. What we could do, we could stage the orders. That means we're going to put 2 orders in. I'm going to put a baseline in, and as you can see there, so actually let's have a look at this. Yeah, I'll put a baseline there of 10 pips to come down, or I could put it there, and then I could put another one above it, and then this one up here will get more money coming straight down into the same 10 pips, because as you can see, it's gone up, it's struggling a bit, it's pushing up, small candle struggling a bit. This may well jump down in just a second, so that's what I'm going to do. I'm going to put an order there and another one at the top of here. Okay, so it'll be 0.65, sell it, the base of there, just put that in there, and we're going to put another one in just kind of above it slightly, about there, and again we're going to sell it. All right, So we have our, let's pull that order onto there, and then that one down onto there as well. Okay. So what I'm going to do is it's quite a very simple way of doing things like this. You set a baseline and you put your other order behind it. Now the idea is to catch the oscillation of the market. All right. In other words, you're just getting a better price. That's all. So as this is bouncing around, if that goes up, I'm pretty sure that's going to hold. All right. But it may probe down, pick that order up, carry on and get down to here. Result. But how often does a market go down, go to about there, go back up to there, and then go down? Quite a lot. It's just the bounce of the market, and that's what we're looking for. And these extra little pips, well, they add up, and they put a little bit fuel in the tank, if you like. So if you have a bad day, you've banked a little bit. It's kind of why I break trades up and what have you all the time. If you're interested in that sort of thing, go in the Scruffy Squad. I explain it fully. It's because, believe it or not, the click of the mouse in a system is not what you're looking for. That's the easiest thing in the world. You can do that on the flick of a coin. It's how you manage the trade. That's where your money's made. You know, yes, you need a framework as to how to get in and why you're getting in the first place. But the money management and understanding how to carve off, you know, scale in, scale out, all of this sort of thing, that's where your money's made. All right. And you can do that with any system, and I've proved it because I've traded any system on here, whether it's a MACD, an RSI, stochastic, whatever. I've done it. And then I've showed you how to manage out of trades, and that's the idea. So what we're going to do, it's triggered, we're just going to let it run out, looking for 10 pips, get down onto the baseline, and happy days. Okay guys, done. Didn't trigger the second order. It's not the end of the world, not really. Why? Because we were paid. And that's the whole idea of what we're doing. We're looking just to be paid. And if you get half your position in, just means you got half the risk. Simple as that. Never be greedy is the kind of the lesson there. But let's have a little look and see where it is. So it was a sell, and we got 670 out of it. All right, not too bad. Could be better. Could be a lot worse. But it means we didn't get our full potential. So today, I would class it as a fail. Simple as that. But should you be worried about things like this? No. It's always process over money. The money is just a byproduct of what you're doing. If you are chasing the money all the time, you're probably going to fail. And I can't stress that enough. For this is doing quite well. Even just taking out the little chunks here, there and everywhere, we've still pulled in a decent profit. We're 30% into an arbitrary target that I put in. We've increased the balance over the course of these 24 trades by 70%, just by being methodical and kind of repeating a similar process each morning. That's what trading is, guys. It really is. And to chase mega money really is fool's gold. And the idea of this challenge is just to show you once a day, little bits add up, and they do. So if you've got a day job or one thing or another and you trade just once a day, you'll add little bits onto your salary. Now, as you keep going, yes, this is made, well, it's 210 quid in profit up to now. And it's not Lamborghini money, you know, it's more money than you started with. And it's certainly more money than a bank would give you. But is it stressful? No. It's nice and gentle. One plan, one set of profits, one little nest egg. Very simple. So, something for you to think about. There's only a few trades left of this. And up to now, it's been pretty good. So, enjoy the coffee. Enjoy the rest of the day. If this was what I was doing as a trading thing, because I'm done for the day. And life is good. So trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.